The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Masters. I'm Steve Rhodes. Tom is traveling. He's on his way back from Denver today and will be joining us tomorrow morning. Right now, we've got the Dow up 77 points, S&P up 9, Composite up 21, Composite and the small caps leading the charge. You got the small caps, Russell 2000 up 6 points right now. That's 0.8%. Composite up 0.7%. Microsoft trading up 24 ticks. Apple up 75 cents right now. Broadsoft right now looks to be leading the charge here, up $8 and change. That's up 30%. We covered that in the first show. And folks, thanks so much for joining us. You can watch this show on Tiger TV. If you're listening on the radio, thank you so much. And always what you want to do is bookmark tfnn.mobi on your mobile device. That way you can always get us 24 hours a day. Of course, we do go live now from 9 a.m. to 6 p.m. each day. Following this show, we've got Kate Stalter doing the small cap roundup, Victor Jones doing the option hour for us, Daryl Martin doing the diagnostic trading hour from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and then today on the Tom O'Brien show, because Tom is traveling, we'll have Kate Stalter doing 4 to 5 and Ken Shreve 5 to 6 out here. Now, we take a look at these markets here. Absolutely, yesterday was nothing but cracks in the ice, as we've been talking about in the 9 o'clock show here. What I mean by cracks in the ice, folks, just simply going back to my old days, growing up in the Detroit area, playing hockey and waiting for that winter to come in so that you can go out on the pond of ice, the lake, and play some hockey. You know, shovel that snow off there. And when you're first making those first steps, because usually you can't wait to get out there and you're eager, you all of a sudden hear those cracks. Now, you don't fall through the ice typically right then and there, but sometimes you keep going forward. Well, there were all kinds of cracks in the market, and we just had a new crack that showed up as I went over to the King Dollar chart. That is the basket of currencies, and it's really important to understand what is going on in the currency marketplace, especially the currency marketplace, because it is so much larger than the equity marketplace, and we want to understand what's going on inside the Euro-US dollar, the yen, and the U.S. dollar, the pound U.S. dollar, Canadian, but mostly, folks, just simply if we take a look at let's start off here with the King Dollar Index, U.S. Dollar Index. You've got it trading out right now at 82.19. It has made a three drive to a bottom pattern. This is very, very critical. Why? It's very helpful whether you're long or short here, because if you've got a failure, what this will set up much lower move in King Dollar. That will set up a much higher move in the equity markets. But as we took a look at the equity markets yesterday, as we took a look at volume, there was no volume there. Can markets move higher on lighter volume? Absolutely. And if they're going to do it, it's going to be a currency revaluation that's going on. That's why you want to pay attention to this chart. That's why you want to pay attention to the Euro-US dollar chart. But what you have done here, what the market has done here, what King Dollar has done here with the Euro and all the currency pairs, you've made a three drive to a pattern. What's a three drive to a pattern? I am so glad you asked me that. That's where you're making expansions of swing points as you're moving down into an area. Specifically, what you'd like to be doing is watching that move down into an area where you're either retracing or expanding. In this case here, this would be moving down into a retracement area. That first drive took place as the U.S. dollar index moved down into the July 19th area when the U.S. dollar got down to a low of 82.80. What did the U.S. dollar index do? From there, it went ahead and it moved up and almost did a 1.272 expansion to the upside on July 24th. That was then their second drive to the bottom came in on July 27th. When it did that, it got down to a low of 82.40. It made a 1.272 expansion. And when it did that, you then had the U.S. dollar index move a bit higher, moved up into the last swing point, was a 0.618 retracement. So you got beautiful sacred geometry numbers all over the place when you take a look at this chart. And then it started its third drive down. That third drive down completing this morning, getting down to a low of 82.07. If you're watching us on Tiger TV, I'll go ahead and blow this up here. It'll be a little bit easier for you to see. You're seeing two 1.272 expansions of swing points. That, folks, sets up up your 3 drive. If we take a look at time, if I take a look at the time interval off by really 1 day. In fact, it really, yesterday may have been the 3rd drive to the bottom. I just didn't see it. But if you take a look at that time, yesterday was, Johnny on the spot, if I can say that. And so yesterday's low may also have set up that 3rd drive. So you're looking at a beautiful 3 drive to a bottom pattern. What else is it doing, folks? As you're doing that, it was coming up against a retracement area. That retracement, 2 retracement areas, 2 other sacred geometry retracement areas. The first one off of the lows from June 19th, that low of 81.39, what the U.S. dollar index has done as a 0.786 retracement. That says keep your eyes wide open out here. Why? Because if that is it for the U.S. dollar index, which it likely is, you will see the U.S. dollar index move higher. When the U.S. dollar index moves higher, what happens? Yep, you get more than just cracks in the marketplace. You get a market that is vulnerable right now, especially as it is up at swing points on lighter volume. Well, not only was it a 0.786 retracement, May 1st, that's the day we're going to take a look at when we start taking a look at ETFs. We take a look at indexes out here. May 1st is your benchmark. Well, May 1st is also a benchmark for King Dollar, for the U.S. dollar index. On May 1st, you had the U.S. dollar index with a low of 78.67. If you go from that low all the way up to the high that was established on July 24th when King Dollar got up to 84.25. What you will also see is what the U.S. dollar index did as it was making that 3rd drive, folks. It was a 0.382 retracement. So what you have here, you've got a 0.786 retracement, a 0.382 retracement off of swing points, making a 3 drive to a bottom pattern. What does that say? That says absolutely, positively, be careful out there in the marketplace because you are walking on ice that has cracks. And you say, what cracks, Steve? Well, we just simply go over to the indexes here. Let's go take a look at what the indexes did yesterday. Now we'll take a look at what they're doing today. We'll start off with the New York Stock Exchange. On the New York Stock Exchange, what you're taking a look at is 2 786 Gartley sell patterns out there. Yes, you've got the New York Stock Exchange moving a bit higher so far this morning. It's trading up at 80.30. If we take a look at the 1.618, just to see where's the 1.618 expansion off of its last swing point, that's up quite a bit higher. That'd be up at 81.32. Yesterday, you had the New York Stock Exchange create this Gartley sell pattern. It produced a shooting star candle. What you want to see if you are a bull today, you want to make sure that it closes above 79.9744. Just the opposite if you're a bear. You want to see it get back underneath that shooting star candle, 79.9744. There was a crack in the ice. Look at the last time you made a 0.786 retracement on the New York Stock Exchange. Let's go take a look at the Dow. What was the Dow doing yesterday? The Dow being a real driver here. The Dow yesterday getting up to a high of 13,187.28. You're at 13,195 right now. The Dow getting up into that May 1st swing point. So May 1st being our benchmark, gets up into it yesterday, closes below. Yesterday when it closed below, it did that with a shooting star candle. When we were looking at the markets coming into the 9:30 session, we were looking at a 30-minute chart. The ES Mini suggested to us that it wanted to also trade higher here in the morning at the open. Now you've got your signal out there from the U.S. dollar index to be very, very careful out here. On the Dow, you want to see it close inside that May 1st swing point. If you're a bull, that would be inside the price point of 13,174.65. Yesterday, it gave it up. If you're a bear, you want to see it close below that. Or if you're going to take a bearish position in the market, you want to see it close below 13,174.65. You want to see it close below the high of yesterday, 13,187.28. Let's go take a look at the SPYs, or the S&P 500. Let's go see what the S&P 500 is doing. The S&P 500 yesterday not getting into the May 1st. Take that back. It did get into the May 1st swing point. That May 1st swing point low was 1395.73. It did that yesterday. Got inside it, closed below it. Right now you've got the S&P 500 trading up at its session highs, getting to the last swing point left out there for it to test. That is April 2nd. So the low out there in the S&P 500 is 1404.46. You have traded so far today up to 1404.14. That's basically where you're at about right now. Look for the S&P to get up into the 1404.46 before it decides to give it up. If we go take a look at the NDX 100, let's go see what the NDX is doing. The NDX trading out right now at 27.1303. The NDX trying to get up to the upper portion of its rising price channel here, and also running into, well, first it's running into some real resistance here because of the downdraft that was created on May the 4th. What it looks like the NDX wants to do is tag the low of April 27th. That would be 27.2316. It's trading out right now at 27.1287. And once it gets up there, it will get to the top of its rising price channel out there. That's where you would expect then the NDX to give it up. If we go take a look at, what have we not looked at out here? The Russell 2000. Let's go take a look at the Russell 2000 index. Russell 2000 setting up a 0.786 Gartley sell pattern on July the 5th here. The Russell 2000 now closing the gap that was left open. It needed to close that gap. That gap was from July 19th. The low there, 801.32, trading out right now at 801.83. So it is inside there. All of the work here is being done, and that's why it's really important to take a look at that U.S. dollar chart here. Now, King dollar closes below. Let's go see what the actual 1.272. This just does a little bit of a rounding here. The actual 1.272 expansion was 82.07. And, of course, well, not to let me down or anything, King dollar this morning getting to 82.07, right to the number there. So you get a close below, and it's got to be more than a penny or two. You get a close below 82.07 in the U.S. dollar index, and that is going to set up a failure of the 3 drive to a bottom pattern. What will that be all about? That, folks, will be all about the euro. So if we go take a look at the euro, you can see not much movement here in the euro. The currencies rule, folks. The currencies rule. You may not trade currency, which is fine, but you want to be aware of what the currency market is doing, because the currency market, in the end, will be the driver. In order for these markets to really bust out, you need the euro to get above the 1.24743. Right now, it hasn't been able to break the 0.618 of just simply the last leg down. That last leg down that we're talking about is from June 29th. That high, 1.26916, all the way down to the low on July 24th at 1.20411. So the euro not being able to bust that, that's a heads up out there. If we go take a look at, let's go take a look at gold and silver, high-ho silver. We take a look at gold. Gold being hitting a resistance area. That resistance in gold, folks, happens to be the 200-day exponential moving average. Always, good to be aware of where those averages are. The actual price point on that is 1623.25. Gold got up to a high of 1621.30. So, that is a resistance area. Let's take a quick peek here at high-ho silver before we go off to a break. High-ho silver trying to take out the 50-day exponential moving average. That has held as support. Silver up at 28.02 right now. Our call-in number, 877-927-6648. Folks, give us a call. We'd love to take a look at your stock. We'll be right back.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look at natural gas. Let's see what natural gas is doing, completing a pattern out there. I thought I had it here on my screen. There we go, natural gas. Okay, so let's take a look at the natural gas contract. This is a continuous contract here, and it completed A to B equals CD pattern. Let's go draw that in. Our A point here was the low on April 20th out at $1.90. The B point, you can use May 18th out at a high of 2.75, pulls back into the June 14th area down at about the $2.16. It makes a 1 to 1.272 A to B equals CD out there. As it does that, what does it do it with? It makes a doji candle. You want to pay attention to doji candles as you are going ahead and completing patterns out there. Well, this was a 1 to 1.272 A to B equals CD. It then starts to sell off. You got the close the following session below the doji. That said it wanted to get to lower price. And if you just simply go off of the A point all the way to the D point, you would take a look at a couple of different normal pullback areas. One of those would be what? The first one would be 0.382. That's $2.75. Yesterday, it moves down into the $2.80 $2.80 level. Now, as it does that, as it's pulling back there, yesterday it made a It made a bullish engulfing candle, and today you're getting a higher close. It may be that natural gas is only going to pull back into this 0.382 level. Of course, what you'd also like to see behind it is volume, and you haven't seen that. You saw volume increasing to the downside. Right now, what you're seeing volume decreasing to the upside. So this could just simply be setting up the B to a C of an A to B equals CD. So let's go take a look at what that could possibly be. We take a look at that, we're just simply going to go from the top of that doji candle all the way down to yesterday's low. And if we take a look at the swing points out there, that would set up the 0.382 level being about where it's trading right now, $2.98. Looks like $2.97 is where it actually got to. So that's made it to the 0.382 retracement. You're going to want to watch the volume on this because it more likely is setting up an A to B equals CD down when you start taking a look at volume. Certainly, you could take a look at the natural gas contract getting up to the $3 area. But let's take a look at a couple of A, B, C, D patterns that could be setting up here. Let's take a look at the first one. The first one, let's assume that that's all that it does today, and it starts moving lower, is the 0.382 retracement on lighter volume on the way up. But would that set up? That would set up more than a 1-to-1 A to B equals CD on the way down. That would take you all the way back into the area here, the candle where you saw a breakout. It would take you all the way back into where you also had some volume. So that would be in the range of about $2.36 out there. Now, if we take a look at a couple different retracement levels in that area, we'll draw two different possible Gartley buy patterns on the natural gas contract. Let's take a look at the first one, though. Let's complete this. You'd really take a look at retracement levels from two different areas. First, you'd come off of the low from June 14th, that low, $2.17, all the way up to the high, that doji candle. What you see at that 0.786 level, you see the 1 to 1.272. So the first area here to mark, if you're taking a look at trying to take a long trade in the UNG, ideally, you would go ahead and mark that point of about 240, 236. That would be your first target. Now, what you'd also want to do is take a look at the retracement off of the lows where the A point on the A to B equals CD up started. That takes you back to April 20th. If we go and take a look at from that low to the high, let me use a different color here. What you will also see that takes place at the 0.618 of that level, folks, $2.42. So your ideal trade on natural gas, that is if the bounce that you get, all the bounce that you get is really up to today, your ideal trade comes in somewhere between that 236 to 240 range. Likely what would happen as natural gas would pull back to that area, you would see some type of candle pattern, but that would be what looks like your ideal trade setup. If we take a look at, let's assume that you get natural gas to retrace more than to the 0.382, does a natural retracement into the 0.618 area, then let's draw that A to B equals CD down. Let's see where that takes us to. So there's our A to B, and our C to D, we're just simply going to come up to the 0.618 level. Well, what you also see is you see that 1 to 1.272, that really takes you into about the same range. The upper, but just all it does is really move the upper part of that range. Well, you got two things. If it does just a 0.618 retracement, then what you're looking at is a possible buy entry in around the $2.59 range. That would just simply be the 1-to-1, and it would be the 0.618 retracement off of the smaller move. That was the C to D leg. And it could do an expansion. It could do a 1 to 1.272 expansion and take you into that $2.49 area. What does that equate to if we go take a look at the UNG? And if you do trade the UNG, folks, what you want to do is you want to make sure that you are paying attention to the natural gas contract. That'll set up the better patterns for you. You can see on the UNG yesterday making that 0.382 retracement, 10.9 million shares so far today, only 2 million shares. 877-927-6648. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow up 84 points, and we're looking at a beautiful three-drive to a bottom pattern here on King Dollar, something you absolutely want to be aware of and be careful about. Now, let's go take a look at volume here. Let's go compare. We take a look at yesterday's volume. First, let's go take a look at yesterday and see what we did. We're going to go take a look at the ETF structures out there. So let's start with the SPYs. Yesterday on the SPY here, you do a total of 85 million shares. We'll go ahead and blow this up on the screen. The SPY's 85 million shares going into the May 1st swing point that had 138 million shares. It rejected it on price and volume. You're trading up in it today, just like you were yesterday. Now let's go take a look at the daily volume out here. Let's go see what have we done during the first hour of trading. Let's go ahead and benchmark today against yesterday. Yesterday on the SPYs, and we're taking a look at a 60-minute chart. So yesterday on the 60-minute chart, between 9:30 and 10:30, August 6th here, what the SPYs did were 62 million shares. Today, in that first same hour of trading, what the SPYs have done here is 20 million shares, folks. Today it has done 20 million shares, pushed up higher after you had some rejections of swing points yesterday compared to yesterday, and we've got a 3 drive to a bottom pattern that's in play, and it's really all about what goes on inside the currency market. Okay, maybe not just the SPYs. Let's take a look at each of them out there and see what each of the ETFs are doing. So let's go to the diamonds next. Why the diamonds? Because, hey, the diamonds have been the lead dog in this hunt out here. The diamonds yesterday getting also into the May 1st swing point. That May 1st swing point at 5.4 million shares yesterday. It gave it up on price and volume, and it got to did 4.5 million shares. So that was the diamonds. Now let's go see what this has done during the first trading session, the first hour of the trading session. Yesterday, the diamonds at between 9:30 and 10:30 on the way up do 5.1 million shares. They do most of the volume yesterday in that first hour. What do we do today? What did the diamonds do today between 9:30 and 10:30? 1 million shares, folks. 1 million versus yesterday, 5 million shares at the open. Ooh, that is a stinger, isn't it? No, let's not stop there. Let's go take a look at the Qs and the small caps. So let's round this thing out here. We take a look and we benchmark volume here. Let's go take a look at the Qs next. The Qs yesterday, what were the Qs doing? The Qs were making a 0.786 Gartley sell pattern. Really completing that pattern here today. But let's look at yesterday. Yesterday, the Qs do 23 million shares, really coming into the downdraft here from May the 3rd that had 51 million shares. Yesterday, so not even close volume-wise. Today, so yesterday the Qs do 23 million shares. Now let's go see what are the Qs doing during the first hour of trading. Let's go take a look at that. Yesterday, the Qs in the first hour of trading on August the 6th, between 9:30 and 10:30, 34 million shares to the upside. What have they done between 9:30 and 10:30? 6.8 million. 6.8, folks. 6.8 million, pushing this market higher with a 3 drive to a bottom pattern in the U.S. dollar index. Let's go complete this look. Let's go take a look at the small caps. You got the small caps, Russell 2000, right now trading up 8 points. That is up 1 full percentage point. The small caps being the lead dog. Well, if they're the lead dog and they're pulling the market up, what should we expect on volume? I've got no idea what we're going to find, but what would you say we're going to see on volume? You'd probably say, Steve, we should see higher volume. Well, if you take a look at yesterday, it did 34 million shares as it was trying to push up into the swing point from July 30th. That had 34 million shares as it was trying to get up into the 49 million share swing point from July 19th to close the gap. That's what the small caps have done today. So far, the small caps have done 10 million shares. Now let's go take a look and see hour by hour. Let's do a comparison. What are the small caps? What is the IWM doing? If we take a look at the IWM yesterday between 9:30 and 10:30, what did the small caps do? 45 million shares. 45 million shares yesterday? Really? Is that possible? Let me just refresh this. That is incredible. So it does all of the volume in the beginning. Let me make sure here. Oh, and I was wrong. I got to reset these charts. I'm having a data feed. Let's go through this again, though. I just want to make sure that we're benchmarking this. Okay, because this is important. So let's go benchmark this. So yesterday, 7.6 million on the diamonds between 9:30 and 10:30. So let's mark this. So you had 7.6 million. Today, you've done 8.8. Okay, so there you go. So that's good then. Now let's go take a look at the SPYs out here, because obviously I'm having a little bit of a data feed problem here. It does seem to be, so let's go redo this. Now let's go take a look at the SPYs. My apologies for that, folks, but this is what you got to do. So let's go take a look at yesterday. Yesterday in that first hour of trading on the SPYs, you do 20 million. What do you do today? You do 20 million. Okay, so that's a draw. Let's go take a look at the diamonds here. God, I hate when data feed problems. I don't know why they happen. And in here, so let's go take a look at the diamonds. So diamonds yesterday in that first hour of trading, they do 1.2 million shares. Today, 1 million shares. So a little bit lighter volume. And yesterday was a light volume day. Let's go finish this off here and take a look at the Qs, see what they have done, what that proper comparison is. The Qs here in the first hour of trading yesterday doing 6.9 million shares. today doing 6.8 million shares, so just about even. But what you are not seeing is any type of significant volume. We know that yesterday was a light volume today. Had a question here. It says, so thank you for just... anyway, sorry about that, folks. God, I hate when there's data feed problems. So can I explain what the term 3 drive to a pattern means? I certainly can. That's coming from the Den, folks. And if you are listening, you haven't tried the Tiger's Den here, go to the homepage at tfnn.com. Click on the link for the Tiger's Den. You can try that out 30 days for free. Awesome group of individuals in there to make sure that, and answer any of your questions, and make sure that, I'm making sure that I'm paying attention to the right charts here. But let's go take a look at King Dollar, the U.S. dollar index, because I think this is perhaps the most important chart to be paying attention to. The U.S. dollar index making 3 drives to a bottom. What that means out here is if you take a look, it's when you're driving to lower or higher price. In this case here, it's 3 drives to a bottom. That first drive on the U.S. dollar index was the drive lower, coming off of the high from July 12th to the low of July 19th. That was your first drive. Your second drive is coming down as it makes a low into July 27th. Your third drive happens to be the low today. That low is 82.07. What you're looking for when you're making a 3 drive to a pattern or a 3 drive to a top pattern that completes, you are looking for something that you don't have to force. Number one, what you want to be able to find is you want to be able to find a 1.272 expansion or 1.618 expansions of swing points. What you have here for that first set of drives, you've got a 1.272 expansion. For that second set of drives, a 1.272 expansion. In fact, let's go measure the first drive to the third drive, we're going to be real close to 1.618. 8191 would have been the 1.618, but you have a 3 drive to a pattern. Now, when you're making that pattern, folks, and you're just looking for it, you're not trying to force it. You want the time to match. That means the number of bars between the first drive and the second drive to match the number of bars between the second drive and the third drive. Yesterday, you got down to a low of 82.13. Today it was 82.07. So that qualifies. If I measure those bars here, I don't necessarily have to count them. I can just simply got a tool here that will allow me to do that. And you can see that we have made it time-wise, or that, in fact, the U.S. dollar index has made it time-wise. So you now have a 3 drive to a bottom pattern. What you also have is you have a 0.786 retracement, and that's what you want to see. When you're making these patterns, you want to see it completing some other pattern out there. In this case here, the most ideal one is where you are coming up against retracement levels, when you're coming up against simply some significant sacred geometry numbers. Well, take a look at the 0.786 retracement of the U.S. dollar index off of the June 19th low, when it was out at 81.39, all the way up to the high of July 24th, out at 84.25. It makes a 0.786 retracement there. You then have a 0.382 retracement off of May Day, May 1st. That is our benchmark that we're taking a look at. That low out there, 78.67, all the way up to the high. So now what you have is you've got just really, this is a textbook 3 drive to a bottom pattern. If it's on your charts and, you still don't completely get it, go ahead and print this chart out and go ahead and mark the expansions, mark the contractions here, because this one here is textbook out there. Let's go take a look at some of these stocks here that are popping. Unfortunately, because of my data feed that I've got here, I am going to have to go into some of the pre-market stocks that we had out there. So if we take a look at some of those, I believe it was Fossil and Toomey were the 2 charts that were leading to the upside percentage-wise. So let's go take a look at the first one, FOSL, Fossil out there, gapping up today, having some nice volume. Of course, Fossil coming into a supply line and running right into it. The supply line here is from May 8th out there. We take a look at May 8th, Fossil gaps down, absolute institutional selling, markdown. I mean, this was a markdown extraordinaire out here. Fossil, of course, Fossil had some institutional selling going back much further. But let's take a look at the most current area here of Fossil. Fossil gaps down on May 8th. The high of that May 8th candle happens to be $93.60. It's trading at $92.17 right now. That had almost 21 million shares on the way down. What Fossil got up to today is $93.20. $93.20 going up against $93.60 price-wise. Volume-wise, it's having a good day. Volume-wise, in the first hour and 15 minutes of trading, nearly 4 million shares. So 4 million shares says it could do about that same 20 million nut here on the way up. That is if you get the same level of volume. And let's just simply go take a look at that. And pray here that the volume. So you can see fossil now simply volume-wise not maintaining that same level of volume whatsoever. In fact, what you're seeing is volume decrease as the price here in fossil moved higher. I don't know what their earnings were, but fossil has some real problems in the stock chart as we go back and take a look at the daily chart. If we go look at put this on a weekly time frame, and you can also see fossil coming into this area here of resistance where it broke out the day of February 14th. So fossil has got quite a supply line of shares from February 14th. That had 10 million shares, as well as the 20 million shares up here at the 93.60 level. I would expect to see fossil kind of stop dead in its tracks here and probably come back and fill that gap, moving all the way back down to the high of yesterday of $70.38. I believe we also had Tumi, the luggage maker, also on the move this morning. So let's go take a look at Tumi. T-U-M-I is the ticker symbol there. Tumi trading out right now. Well, the Tumo is not going to work. Let me put the actual right ticker symbol there. T-U-M-I. So as we take a look at Tumi, that gapped up. That's got some volume. Let's go see what Tumi is doing. So Tumi looks like is an IPO. Folks, this is a dangerous IPO, isn't it? Opens... April 19th looks like, let me just refresh the screen, make sure I'm getting all the right data here. April 19th is Tumi, is IPO. Does a low of 24.07, a high of 28.70. How'd you like to be that person that bought at 28.70? Why? Because it came all the way down to a low where it made one of my hammer candles on June 4th. Made a hammer candle. Now, that's a beautiful little candle pattern out there, isn't it? Makes a low. Coming in on June, it looks like it's made a couple of hammer candles on the way down. So you can see that you had folks that were simply trying to support this. The one that worked, though, happened to be the June 4th low out there. It comes down with 2.7 million shares. Right now, what Tumi is going to do here is going to run into some supply here coming back to that first IPO date, because those folks that bought it, even if you bought it at the lows of the day, 24.07, they haven't seen that since the time period of May 3rd. May 1st was the last time they saw that kind of price, and so now they're just happy to get some of that money back. You get Tumi. We take a look at volume today. 983,000 shares. It is up over its most recent swing point with volume, that most recent swing point being June 18th out there. But Tumi does not look like something that I would want to step into. Not, quite frankly, until it gets up over the high of about $28.70. But Tumi's got some work cut out for it. Those are the only two that I know that were popping out here. Let me go take a look at the Dow. Let me see what the data feed looks like here on the individual Dow stocks out here. So if we take a look at what is popping to the upside, you've got United Technology, Caterpillar, J.P. Morgan is up $1.20, IBM up $1.17. Let's go take a look at IBM, see what IBM is actually doing out there. Why? Because that is the number one weighting inside the Dow Industrial. So if we take a look at what IBM is doing, IBM had pretty large downdraft here in the June 21st, June 22nd time frame. If we take a look at what IBM is doing, it's going back up against its swing point from June 19th. That swing point had 3.2 million shares. Yesterday, you do 2.3. Today, you have done 800,000 shares. Let's see if it's gotten over that area. It's also 0.618 retracement that IBM has made it to. The June 19th swing point high, 199.99. Trading 199.86. Actually got to 199.99. Here intraday this morning. So the work for IBM to the upside looks like it is over, as it's done the 0.618 retracement and coming into a supply line as well, and its last retracement area. 877-927-6648. Got the Dow up 76 points. The S&P's up 9. We'll be right back, folks.
Are Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. As we close out the segment here, let's go take a look at some of the new additions to this week's IBD 50. Let's start off with a company, ticker symbol JAH, Jardine Corporation. They manufacture, sell consumer products worldwide. The company's outdoor solutions segment provides consumer lifestyle products, including camping and outdoor equipment such as air beds, camping stoves, coolers, foldable furniture, gas grills, lanterns, and the like. So let's go take a look at what this is doing here on a monthly chart. Trading up at all-time highs for this stock here, trading out at 48.47. If we take a look at ABC patterns and start there to take a look at the stock chart. On the monthly chart, your A point is going to be down at November 30th, 2008, when it was trading down at $7.20. Makes a very nice run up into the August 2010 time frame, moves up to $35.11. So that was a pretty nice run, $7 to $35. Pulls back. Looks like if we take a look at the pullback on the monthly basis, looks like about a 0.382 retracement, which it is, just short of a 0.382 retracement. That sets up oftentimes more than a one-to-one move. Of course, we can see on that C to D leg much weaker than that straight line move on the A to B leg. What this does set up is your B point here was that March 31st, 2010 time frame. That March 31st, 2010 time frame, $35.11 had 18 million shares, 18.7 million shares. The first time you get up above it, you do it with half the volume, 9.7 million shares. That says, nope, not going to do it. It comes back and it pulls back and it tests out the swing point, the C point, which was July 31st. That had 16 million shares. Came back and it tested that with 23. So that was 23 going against 16. But that area held. It was tested the following month in September with more of the volume that you wanted to see, 13 million shares, coming back against 16 million shares. Then from there, what does it do? It makes a bullish engulfing candle on the monthly chart, but it sets up the C to D leg. In fact, why don't I just redraw it coming off of that swing point? We'll just do that just so that it looks a little bit nicer out there, maybe easier for you to follow. Now, if I'm going to do that, I'm going to use this B point right here. So we can do that. We can certainly change that around. So let's take a look at, there's a couple of possible ABCs that you can draw, but let's draw this one here. Let's draw the more current, let's say A to B equals CD. So what we're going to do is we're going to take a look at that B point, and we're going to go ahead and use the April 30th, 2011. 3750 is the high, does 9.7 million shares. Now, I'm drawing a line across here, folks, because it's easier just simply on a chart, in my opinion, to see if you are able to take out that B point with volume. So on the monthly chart here, as we draw that across, what we can see here is as the B point is taken out, which is the month of March 2012, it does it with volume. That was 23 million shares, taking out 9.7. What's that set up? That sets up likely at least a one-to-one A to B equals CD. It's trading out right now at 48.45, and this thing wants to hit 55.89. But it could also move all the way up to the $64.12 range. Now what you want to do on a monthly chart or any chart is just simply take a look at what the expansions of swing points are. What swing points would you use? You would come all the way back here into the June 2007 time frame when it made a swing point high of 45.09, all the way down to where we're starting with our A point. So what you can see is 55.40, 55.83 is going to be the completion of two patterns. One is going to be a 1.272 butterfly. The other is just the one-to-one A to B equals CD. If you don't get any bearish sign there, then you'll see price wanting to move up into the $65 to $68 level. That is on JAH Jarden. However, if you come back and you take a look at this on a daily chart, you do not want to see this stock here get below, I would say, the breakout, the most recent breakout, which was August 1st. That price point is $44.84. Stay tuned, folks. Kate Stalter will be up next. Then Victor Jones, Daryl Martin, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. Thanks so much for joining me, and have a great morning. Take care.